TRREB just dropped their April 2026 Market Watch report, and there's a lot to unpack, especially if you live in, own, or thinking about buying in Vaughan or anywhere in the 905. So today I'm going to walk you through the numbers, tell you what they actually mean in plain English, and give you a real picture of where this market sits right now. So let's get into it. Let's set the stage with what's happening across the GTA as a whole. In April of 2026, there were just under 6,000 home sales across TRREB. That's actually up by 7% compared to April of 2025. So sales are moving in the right direction. But here's where it gets interesting. New listings came in just over 17,000, which is down around 9% year over year. Fewer listings, more sales. On the surface, that sounds like a tightening market. And in TRREB's own language, says exactly that. They're calling it a tightening in the first full month of spring. But here's the thing. Even with that tightening, average prices are still down. The GTA-wide average sale price in April was just over $1 million. That's down nearly 5% from April of 2025, when the average was just over $1.1 million. So we have more buyers showing up and fewer homes to choose from. But sellers are still not getting last year's prices. What that's telling you is that there's still a lot of caution in the market. Buyers are more active than they were, but they're not panicking. They're still negotiating. They still have power. The MLS Home Price Index Composite Benchmark, which is a more stable measure than the average price because it controls for the mix of homes sold, was down around 6.5% year over year. And homes are sitting on the market longer too. Average days on the market was 29 days, up from 25 days last year, a 16% increase. So the headline is this: more activity, but still a buyer's market. Prices are softer, inventory has tightened slightly, but buyers still have room to negotiate. Now, Vaughan specifically. Vaughan sold 122 homes in April of 2026. The average sale price in Vaughan came in just under $1.2 million. Now compare that to the GTA-wide average of just over $1 million. Vaughan is running about $115,000 above the board average. That's consistent with what we've always known about Vaughan. It's a premium 905 market, and the numbers back that up. The median price in Vaughan was just over $1.1 million. And that gap between average and median being relatively close tells you the market isn't being skewed too badly by outlier sales at the very high or very low end. It's fairly consistent price band. Now here's where Vaughan buyers and sellers need to pay a close attention to. The MLS Home Price Index for Vaughan shows a composite benchmark of just under $865,000. Now that's down 6% year over year. If you look at the detached segment specifically, which is the dominant property type in most of Vaughan, the benchmark is just under $950,000, down around 6% as well. Townhouse benchmark at just under $775,000, down nearly 8%. And condo apartments in Vaughan are the benchmark at just under $460,000, down 12% year over year. And that's very significant drop and worth calling out specifically if you're a condo investor in the area. The sales to new listing ratio trend for Vaughan sits around 33%, which is firmly in a buyer's market territory. For context, a balanced market is generally considered 40% to 60%. Anything below 40% favors buyers. Vaughan is below the threshold, which means buyers still have room to push on price and conditions. Now, Vaughan versus the rest of York region. Vaughan sits within York region, so let's look at how it stacks up against the neighborhoods. Because if you're a buyer with flexibility, this really matters. York region overall averaged just under $1 million in April, with a median of just under $890,000. So Vaughan at just under $1.2 million average is running well above the regional average. What's sitting below the York region average? Georgina, which is average just under $770,000, the most affordable market in the region. East Gwillimbury came in just over $1 million. Aurora at just over $1,150,000. Richmond Hill at just over $1,170,000. Actually slightly above Vaughan. And Markham at just over $1,140,000, just below Vaughan. So in terms of price positioning, Vaughan is firmly in the premium tier within York Region, alongside Richmond Hill and Aurora. If you need more bang for your buck and you're willing to push further north, East Gwillimbury and Georgina offer significantly more affordable entry points, but you're trading price for commute and amenity access as well. Now, a very big key factor is the months of inventory figure for York Region, which overall is 5.7 months, which is elevated. More months of inventory means more supply relative to demand. Again, consistent with a buyer favorable environment across the region. The 905 breakdown, Peel, Durham, Halton. Let's run through other major 905 regions quickly so you have a full picture. Peel region, which includes Brampton and Caledon and Mississauga, saw just under 1,000 sales in April at an average price of just under $950,000. Brampton specifically averaged just under $890,000, while Mississauga came in higher at just over $1,090,000. Mississauga's benchmark is down around 5% year over year, and Brampton is very similar. Peel as a whole has months of inventory sitting at around 5.4. So similarly, in a buyer's market territory, Halton region, Burlington, Halton Hills, Milton, Oakville averaged just under $1,250,000 across just under $700,000 in sales. This is the priciest 905 region by average.